Hello traders, Gary Wagner here. It is approximately 11:45 in Honolulu, 5:45 in New York. It is Thursday, the 24th day of May, and this is the daily report for gold and silver. Mixed bag in the precious metals markets with the majority of the complex down, meaning gold, platinum, palladium, and silver up today. Down currently about $4.50 in gold, about 0.29% lower on the day. As you can see, current print 1557.01. That would be the bid price, with a low of 1550.60 and a high of 1579.10. Silver, on the other hand, is showing a little resilience, not a lot, but a little, up about 48 cents, 1.72% higher, low 27.54, high 28.67. As you can see, current print 28.26 on our daily chart. You know, ever since we had this tremendous move both up and down in gold, we've kind of moved sideways. We're looking at a 240-minute chart, straight candlestick format. We'll convert it into Henk in a little bit. Let me kind of shrink that down. I see the potential, and I underline the word potential because we aren't there yet. My belief is that we'll probably form some sort of a double bottom right here just above. As you can see, this is that 1520 area right here. 1532 is the intraday low that we hit in gold. That's right here. You can see that it is a little bit higher, but most importantly, you can see that it also matches this low back in December of 2011. And of course, this is after the market had come down from the record high of, I believe it was 1920. The market comes down, makes this tremendous low here at 1520. We see a $400 drop, and from there it moves back up. I believe it was 1802, if I'm correct, and made this high here. Ever since that, we have seen this market kind of meander lower. Looked like we formed a double bottom here. That wasn't to be as the market came up, and we're now getting a retest of this double bottom. Well, what does that mean? Right now, what we're seeing is really sideways activity. The market itself has been kind of trading within a really small defined range. We'll go ahead and blow that up. If we go ahead and convert that to a candlestick, a Henkin chart, it's going to look a little bit different. So let's go ahead and do that. And realize this is a very, very short-term chart, but what we are seeing in this market right now, we're not really getting a clear defined downtrend. You can see we do have red candles here, there's no doubt, but look at the size of the tails here. It is really, what we're noticing is almost sideways activity in the market as it tries to find a footing or a foothold. My belief is that we're probably still going to head lower and get a solid retest of this area. If the market does take off, that would be a different story. But as of right now, my belief is that it's probably going to retest here, will form some sort of a bottom. If it cannot hold this level, and we've talked about this throughout last week's trading, if it cannot hold this level in this area, we're looking at 1463, I believe, is our next Fibonacci retracement level. Now, traders, we are looking at a 720 minutes straight candlestick chart. You'll know that when I go ahead and blow it up in a little bit. Reason for putting this up is here's where you can see this record top in at 1920. Market comes down here, and this is that testing of 1520. That's that first testing here. We're just going to simply draw a line across this. And I think that when we look at it in this way, we can see, and we talked about this again last week and the week before, the potential for this triple bottom right in here, whether it has retested this area, and that's what we're going to see because we did get a low of 32, it's pretty close, or it will take one more stab at it. We will have to see. If it can't make it to that area, the real next Fibonacci retracement area is going to be 63, but I want, before that, you can see this is based upon these lows just prior to the market going to its record high. This is back in June of last year, and as you can see, that would be the first target if, in fact, the market does go any lower. Lastly, we do have a nice gain in silver. There can be no doubt about it. We're looking at our daily Henkin chart. You can see that after this doji, it has gone green. Not very large body size, though. You do have the absence of tails, but you're getting really a mixed message as far as I'm concerned, because we're getting this alternating pattern of green, then red, then green. We're also seeing the market consolidating in a narrowly defined range right in here. For that reason, I don't see the market right now as having the ability really to just bust out to the upside. And personally, I think what we're going to see in this market really is going to be sideways trading activity, at least through the end of the week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.